Hello, this is Sherman here, and today is the 13th of August. So it's been some time since I last posted my chart biases, and I thought I'd do one today. Okay, let's go look at the DEX. So DEX is pretty much still doing its consolidation from what I see. All right. So this is what we have. As usual, we're still afraid of the 382 to the upside, right? Still afraid of the 382, meaning that any sells, big sells, would become good when price action is able to hit one of these levels, you know, because once you hit some kind of 382 level, that's a very good thing for more downside then, right? Then you get also a nice three-way structure like this. And if you see price start to weaken, like here, start to weaken, go sideways, or maybe any three-way push, something that just looks sideways in nature, right? Not like this, but more like, oh, I can't sustain anymore. You know, that's also a good sign for downside. So you just wait for this one, wait for push down, wait for short, wait for it to break. Or you can hook back, but then of course then you're looking for more down. So if price action could get to any of these levels like 382, it's generally a good thing. Can we also trade to the 382 level? That's also possible. But that would be trading on a lower time frame though, maybe 5-15 minutes, which is kind of out of scope here because we're talking about the bias, right? So if you're trading on lower time frames, for those who are adventurous enough to try, you can wait for price action to pull back first. So let's say these levels are all going to be important. So let me see. So this one went sideways and then it dumped. And then it shot up again. Okay. I would say levels you want to look at would be all levels like this. All these levels. You have to look at them. Wait for price action to pull back first. We also need to go down to the 1 hour lower time frame. So 1 hour doesn't really work. You can go to 4 as well. 4 hour moving averages don't really work too. So the best way to trade this, I would say, is today is Friday already. So what we want to do is to see if some kind of pullback would be good. You need some kind of pullback on that. This ABC, this is one. See, to me, it's really no trade because you don't know if this can happen, you see, to clear people out of the market. So all this can possibly happen. So if you're looking to trade up to that 382 level that we spoke of, let's go to the daily. So I'm trying to explain what the low hanging fruit is. Like these type of structures will make it easier to trade because why? Then you will also come back to this moving average. And you will generally trading one price to make nice structures like that. Come back to moving average here. And then you see price action candles go up. Then you can make your way up again like this. And of course, some people, what they do is they like to play with a 270. So do I have to put it on? I have to put it on just in case. So people know what I'm talking about, so that at least it gets up to there. And of course, that could coincide then with something like a 382 level over here. See? So the reason I'm putting all this out is so that people can understand. Otherwise, generally, I can, if you know it already, then you don't really have to put it. Too many lines on the chart sometimes, right? So generally, if you know what you're looking for, so that's what you're looking for the safe trade. Nice, powerful pullbacks followed by a move up. And then once you hit those levels, you know that this is in the play as well. So a lot of twists and turns in the market. So that's one thing you can look out for in the DEX. movements in the market that make the trade safe. So there's a lot of just sitting around doing nothing until the trade becomes safe, right? So that's a DEX. We are looking for safe place, safe trades. So since we're looking for possible DEX to the downside, euro to the upside would be a good thing. Yeah, I actually this is actually kind of strong. Kind of strong, but still I think price will, you see I got an alert over here because I'm interested to see if price is going to turn here or break this low and turn. So since I'm kind of biased to the DEX to the downside, I'm kind of very keen on this happening, which means dollar weakness. Since I'm hoping for the dollar weakness and I'm looking for signs that it will go down. If the dollar DEX goes, the dollar gets weak, that means I'm looking for euro dollar to shoot up because we want the DEX, the dollar to get weak. So we're looking for this move upwards. And of course, these moving averages are going to be important, you know. They're important because of the reactions that they will give, right? Like for example, you see when it first pulls back, what happened? It did not go immediately there, and it went up and came back again. But there's always going to be some kind of, you got to be aware of the reaction that can happen when it hits these kind of moving averages. So let's say you enter from here to there and you don't understand that moving averages are kind of important. Then when this happens, your 1,000 became $0, right? Your 5K profit became $0. So you don't want to give back the money if you're a day trader, right? So must be aware of to be very good day trading, especially, I don't know, swing day trading, you can call it that. You gotta know where all the you gotta understand a wide discipline of things, how other people are trading as well, what they're looking at, right? So I'm highlighting this. Be aware of the moving averages is important. So that's the euro dollar DEX. What else I want to mention? Just updated the DEX. Let's go look at crypto is very interesting. I'll talk about crypto and then Doge, and maybe a bit of S&P, and then I can call it a day. So Bitcoin looks on the rise, right? So I can imagine the Bitcoin bulls are celebrating and banging their drums. Okay, so just be very wary, be very, very wary, because if you want to pick the low-hanging fruit, you must always wait for price action to come back. Come back to one of these, come back to the moving averages, come back to the moving average somehow. It might go, but at some point you want it to come back. You must come back. Otherwise, you're trading in thin air and floating in thin air. Any trades here are all in a very low time frame. But if you're looking at the daily moves, right, you do want it to come back somehow to this moving averages or to some level, you know. Or you see this one comes down. See this red here? Yeah. You need to look out for stuff like that, right? Look out for stuff like that. Like for example, if a person was trading here to the upside, right? But look, very, very sharp moves that will set you back to set the they will take back all the profits again, right? So let it come back to the moving average first. Let it go, do whatever it wants. The low hanging fruit is it must come back. You could call it the moving average, or you could also come back to one of these levels over here, right? And then you try again before you try to enter. So now just let the market establish the high and the low, right? Let the market establish the high and the low, and then we can worry about it later. So if you see over here, I mentioned about this part, YouTube bullish hype, but because once it's going up here, one of my previous videos I showed that I was cashing out because I don't want to give back my profit when this thing happens, right? So imagine if a person bought here and then he lived through that, not knowing if this is going to go lower or higher. And then it went up here. So it's a very 50-50 thing. There's no there is no consistency, meaning that it's just luck trading. Because this one came here and it's lucky that it went up. But what if it did not go up, and what if it just continue to collapse? You see, because you want to be someone that can trade all charts, not just a technique that works on one chart. Then when we go over to gold, we start losing money, right? So we want to be able to trade everything and know where the stop loss is, know where we should enter, etc. Right? Okay, so you can put one level over here. So one level over here. Very interested to see what happens when price actually comes back down to 39,000 or even lower. Lower is fine as well. Because at some point, this will pull back somehow. Just like this, it will pull back. Right now, we're just letting the market establish the high and the low. What will be most tricky, right? What will be most tricky is if price did this, one more dump here. Always remember, and then it shoots up. Right, that will confuse a lot of people, but that's how market moves to knock people out of their positions. So even if price action comes back, don't just buy it. Don't just buy it. You gotta wait for some kind of price action and know how to enter the trade in order to take the next move to the upside, right? But generally, what the first time it comes back, it's often a good chance to bounce. So just take note of these levels when it comes back for Bitcoin. Doge, oh dear Doge, dear Doge. Doge looks very interesting on the looks very interesting at 8 hours. Let me see on the 12 what's going on. Doge. No, nothing much in the daily. Doge generally, if we're gonna use Doge as a reference, what should I say reference? Since we like Bitcoin to the upside, and we also like Doge to the upside. And the reason why you like Doge to the upside is because of people who trade the RSI. So let me just show you what I mean very quickly. So these are certain biases that are useful. Okay, so like you come and look at this. Doge has got divergence over here, which is this, you see. Now, don't be misled by thinking that divergence is a holy grail, because there can be divergence and then suddenly there is no divergence. It just looks like there's divergence, and it looks like it should turn, but what it can do is it just goes here, maybe weeks up. You think there's divergence and it should go up, but then it just suddenly collapse. And suddenly there is there's divergence. Hey, no more divergence. This thing just collapsed, right? So I need to put it out there so that people don't just see divergence and dump in all their money. So right now, it's looking nice, looking like a nice push to the upside. It's playing above the moving average. That's a good thing. We always like price to be playing above it. But what I would recommend is for safe trading, right? You actually want one more push to the downside. Something like this would be safe, okay? Something like this is safe. So this one made 1, 2, and 3. Now this one could have just dropped, right? So don't just be very aware. So there's one move like this, and then this one went up 1, 2, 3. Now put a trend line this way. Generally, I would say the trend line is not that useful. Not that useful in such a scenario, because price action can always just try to dive below this level. It's going to give you the false sensation that this is going down. But like I told you, because of the RSI, you are looking more for the upside for Doge. All right, this is most likely a first wave of some sort. That's my bias on it. I think it's the first wave going up. So you're looking for it to come to 382. Do I have to put? I'll just. Okay, basically, this is a very good place for it to come to. All right. Let me move this up there. Good place. So it's a, if you find any reason, right, like a time box pullback, you like this move. This is a good move, right? Can this keep crawling to the upside? Yes, it can. But you gotta understand that while this can continue going and going and going, well, you gotta be able to comfortable with being stopped out, right? So the safer move would be price action somehow coming back to some key levels, like maybe here 0.22, stop out some people before, it goes again. That would be the best. That would be the best. Let me see at the 8-hour. Let's go daily and see what's happening. So the daily moving average was tricky. If anyone took profit over here, I think that's fine, because gotta take notice of those moving averages. So over here, I'll say I'll pull back to around this level over here. Many reasons. What I'm trying to give are the safe scenarios like this. You can put where is it? Yeah, a level like this is a good level too, to look for some kind of bounce as well. Basically to clear orders, people who are thinking that they are home run. Well, the market can make these moves to clear people out. So got to be very aware of those kind of moves. So if you get a trade, a pullback all the way there, that's a very good thing. Nice time factored pullback. In fact, if you get something like nice box like that, will also be good. But we'll have to see if that happens, right? If that happens, it's a good thing. So if you're looking to just take the buy, well, you gotta be able to take the loss, right? So if someone had gone in here like that, break the top, and they decide to go, then of course the stop is over here. So if they believe in the entries, an entry at the top here, right? Means the stop was below this, because they believe that it's going to continue going. And that be your 1:1 or 1:2, you can try. But this move may not get to the 382. You see, all you know is that there is one move up, but beyond that, it's hard to tell whether it's going to go. The best moves to get to this kind of levels are actually deeper pullbacks that, like I said, take people out of the market so that they can continue to go. If you jump in here, it's 50-50. All right, so got to take note. So here I'm showing how to basically scalp using the moving averages, breakouts. You have a bias to the upside, but like I said, this one could go or it may not go. So if you just want to sort of scalp it up like this, just take and go, I think that's fine too. Because if you took this breakout and you don't exit, you always have this fear, you see. Price did not exactly go out straight up. It actually went up, it came down to the moving average before it shot up, and then now it dropped again. So you're going to be constantly giving profit and then taking profit and then giving profit back to the market and taking some again. So it's going to be a bit confusing. That is why I recommend, if you want to go for longer targets, always wait for a bigger corrective structure, right? That's important. Okay, so that's Doge. What else? Maybe I talk a little bit about gold. Then, so gold, I didn't want to talk about this some time back because it was basically over here. And I said that this can basically do anything, but the bias was downside. There would have been an up move like this, but the problem is you don't really know what the up move was going to be. All right. You don't know what the up move was going to be. The up move could just be a corrective structure like this. There'll be one sideways, and then it will come. Okay. Sorry. The up move up, down, up is possible, or down, up, down is possible. So if you could sell it, naturally, if price action was to do this, if price action could have done this, that would have been the best. That would have been the best, because this is actually a 5-wave structure. The typical Elliott wave that everybody loves, right? 1, 2, this is a long third wave, 5. So there was always going to be an A move, a B move of some sort. This case happened to be here, but the B move could be there as well. So this move was tricky, and that's why at that point in time, the downside was a bias, but this credit structure was always going to be quite messy to trade, right? There was one buy here, but I said let's see if gold breaks up, because if I did want to trade both up and down, if you want to trade the up and the down, well, then you have to wait for some sort of breakout, and the breakout would have been up here, above here, right? And then you're looking to see whether you can get there, and then your risk is there. So you need to know exactly where you would have been stopped out, basically, if it happened. If it did not happen, then well, this actually happened in the end, and this was all the correction, which was quite a tricky move. So basically, I didn't really want to trade this because because I knew that this was quite tricky. This could have come here, could have done this, then it could have also gone up. There's a lot of stuff he could do. So even though you know that the bias is down, but you prefer for the sell to be up here than to try to be here, right? If let's say price came down here like so, okay, take all this out and then pull back real slow, I would say then that's a good sell again, you know? So you're gonna have like one move down like this, 1, 2, 3, another pullback like this. This is a sell. All right. So you're waiting for a nice time box correction, basically. So I just do that. That's why I've been looking for something that suggests the downside, and also because I understand that this is a first wave. I'm looking for this wave. But to enter this, I need this to happen. But however, in this case, gold was really, really tricky. And it's very typical. Gold is quite heavily manipulated by whales out there. So unless you are really, really good, and sometimes not so good idea to trade gold. All right. So but when I mentioned about that pullback, now that I'm looking at this had come down like this and then pull back, you see here, and then it pull back here. You see that? Yeah. Then you could see this pullback, this moving average, and then it goes. See the pullback, the moving average, and then it goes. See pullback, moving average. Then at some point, it just pierces right through. So that's what I'm trying to say. If you're looking for the sell, you need this, right? But in this case, what you do, it just plunge right down. So it was just very tricky to trade this. So waiting for the confirmations, waiting for breakout confirmations, waiting for it to come down here, maybe pull back, maybe, and then finding a reason to enter here, supported by the moving average, which in order to take the move down would have been the best way to actually do it, right? So here you see a combination of a few things. First, of course, is Elliott wave. You're looking for time factor. You're looking for breakouts to see which way they actually can go to set up your stop loss, right? In this case, you're waiting for pullback to the moving average as well to try to look for the move down, right? So it's just a combination of a lot of things in order to get a trade, and of course a lot of patience, right? So that's goal. So I'm just explaining it, how to actually take money from the market. Go right now where it is. Let's see whether it broke the low. Not yet, hasn't broken the low yet. So because of this latest move in gold, strong move to the downside, you just generally have to wait for it to play out. Just wait for it to play out. Wait for it to play out. Something nasty like that. You will just do something nasty, and then hopefully you can look for the next move down. So go. If you ask me, I just wait. If price action comes back down here, you could try for one more move to the upside. All right, but right now it's somewhere right in the middle. On this time frame, uh it's not tradable at this point. I would just stay out, and it's Friday anyway. You know, you don't really want to do anything. This weeks often get covered as well. Weeks can often get covered. You cover this whole entire week. So, but like say today is Friday, so I think just let it go. You know, don't try not to trade on a Friday. So that's gold covered. So S&P basically still looking kind of solid to the upside. S&P just keeps crawling and crawling. So I've got this little channel that I drew out here. So what does that mean, channel? It's just basically if it comes, this is an area of value that you can look to buy. Over here, you don't want to buy. You don't want to be a buyer here because any buys, you know, it's tricky. It's tricky. If you look to buy here, that means you must have looked to buy here as well. So you look to buy here, you would have been susceptible to this move. That will put the trader under pressure. So if you buy here, if it does this move, that means what happens? Yeah, the trader, you must know that you are susceptible to this if you decide to play around here, right? So understand where the stop loss is. If you want to buy it on a very low time frame, fine, but be prepared to be stopped out because you don't want to make that and have suffer something like that, right? So this is not a very good, not a very ideal situation. Right? So S&P covered, gold is covered some crypto, covered the DEX, and everyone's favorite euro dollar. And I guess that's it. Not to keep this too long. Anything else I can share? I think that's good. So I just want to end off with I spoke about the euro dollar, about DEX weakness and the euro dollar buy. So I'm quite interested in this move to the upside, right? I'm quite interested in it. So that's what I'll be looking for. So these are all important levels over here, where there was a recent push. It came back down, it went up. So it came back down here again. So I'm waiting to see for a reason to take a buy to the upside. Right? So that's something that I'm looking for. So that's my bias. And this is probably a move for next week. Let's see. Right? So I guess that's it. You take care. Bye-bye. And